This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November 16th, 2012. Our time is 8:47 Mountain, 10:47 Eastern. Our radio show runs AM 640 in Toronto, 630 CHED, Edmonton, QR 77 in Calgary. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. If you have iTunes, if you don't get iTunes free of charge on your computer, your smartphone, we have a free podcast through iTunes. You can listen to our radio show anywhere you go. And we're taping our show. A lot is happening in the world, obviously geopolitical. We have Israel and Hamas going at each other. We had austerity riots in Europe. Unemployment, 50% for youth in most of the countries of Europe. 25% for adults. Spain, they stopped foreclosures. Too many people were committing suicide. We come to the United States, the fiscal cliff. They're arguing about the fiscal cliff. Let's face it, you look at the debt that they have in the United States and deficits going out for the next 5 to 10 years, they have serious financial problems. And Harold, we're in a perfect storm right now. You're coming to us from Colorado, where you gave your seminar last night, and you had an opportunity to speak to a lot of people about hard assets. And I know that everyone is taking a hard look at gold, silver, platinum, palladium, colored diamonds, because of the times that we live in, not only financially, but geopolitically.
You summed it up beautifully, Randy. You're 100% right. First of all, the seminar that went on last night was an excellent seminar, but I do have to apologize. I'm a little bit embarrassed. We did hire a firm that was going to stream live our presentation, and evidently it's a fairly new concept, and most people did not get to see it. So we had a lot of people sign up. Over 4,000 people had signed up worldwide to see the presentation. All of our friends in Canada that signed up, we will contact you over the next week or so, and we will do private, individual online seminars for you. So, again, with everything happening in the world at this point here, we want you informed as to what's going on. And again, Randy summed it up beautifully. Geopolitically, there's major problems all over the world at this point here. The markets aren't reflecting it at this point here because they can't digest what's really going on. At this point, all markets are holding support. And, again, I've been through these situations before, and I see the markets react this way. I'm very confident that we're in the right markets, and we're going to see massive moves in the markets that we're in. The gold market right now is trading at $1,713, so we're holding support at $1,716.80. I think we saw the bottom of the market a couple weeks ago, and again, I'm very bullish on the gold market. The silver market is trading above the $32 level, is trading at $32.37. Again, I think we've seen silver bottom out a couple weeks ago, and again, we're very, very bullish on silver. I think is tremendously undervalued, and with everything happening in the world at this particular point, gold and silver are two of the markets that you need to be in. You need to own the physical metal. The markets can become so volatile that you don't want to be in the heavily leveraged futures markets because you're going to end up not being in the market long enough to catch the moves that are coming in this market. There's no doubt that we are going to see massive inflation. What's happening in Europe is unprecedented. Again, the fact is that nothing has gone right with the sovereign debt. There's just not enough money in the world to bail out all the countries that are on the verge of demise. And basically, when you've got 25% unemployment and 50% unemployment in the youth market, you're looking at depression numbers. Those are the same numbers that we saw back in 1929 and 30 when the U.S. and pretty well the world went into depression. This is a very, very scary time for most people. You just don't know what to do. You know, the fact is that at the end of this year, this fiscal cliff is coming, and the indications is that the Republicans and the Democrats are not going to get together on this. And if they don't, you're going to see situations happen that will cause massive sell-offs in the stock market because, again, the capital gains taxes are going to increase substantially, and it makes no sense to keep money in the market long term. And with the volatility in the paper markets, like the stock markets at this point, it's just not an area you want to have your money. Don't forget what happened in 1999 when everything was going extremely well in the 90s and the U.S. dollar was strong and the economy was strong and the stock market and real estate markets were strong. and everybody was making money in the stock market. If you remember the dot-com companies, every single week you see another company splitting and making fortunes in the market. But then in 1999, the reality hit, and the Dow plummeted, and the Nasdaq went from 5,000 down to 1,000. And that's the reality of what's happening when there's very heavy speculation in the stock markets. The market started to recover, and then back in 2008, just as people were recovering their losses from 1999, all of a sudden it hit again. The stock market fell by 50% from 14,000 down to 6,500, and everybody lost their money again. Now the market over the last 4 years has crept back up, and now we've got 4 more years of the same situation in the United States, but probably much more in depth and a lot more dangerous. And the fact is that we're getting ready for another massive drop in stocks. If they don't come up with a solution by the end of the year for this fiscal cliff, watch the stock market drop another 20, 30, 40%, and you don't want to have your money in the market at that particular point. The fact is that we're heading into a time of extremely high inflation. There's no doubt what the game plan is by the Federal Reserve in the States. They're going to continue to print and print and print new money and try to get out of trouble. But by printing, it's going to reduce the value of the dollar substantially, and that's what's going to push gold substantially higher and silver. Unfortunately, with everything going on in the world at this particular point, with what's happening in Israel, which will cause oil prices to climb substantially, and all the confusion that's going on in Europe and in the Middle East, the markets really don't know how to digest the news at this point, and it's almost just sitting there trying to realize and figure out what to do. But there's no doubt in my mind and many others what's going to happen. We're going to see a massive rally in the hard asset market. Gold, silver, wait till you see what's happening in the diamond market. It's just absolutely exploding. This was one of the best weeks in diamonds. So again, I'm still very, very encouraged, and again, still holding and adding to silver positions, because silver, which was at $50 at one point, is trading right now below 33. There's just no way in the world that this market is not going to run. So again, with what's happening in Israel right now is the start of what's going to happen in the Middle East. It's going to cause oil prices to go substantially higher, and it's also going to cause a lot of problems with Iran, because I see them coming into the situation also. So there's just no doubt that the problems are escalating right after the elections. People are really starting to get upset. In fact, doing the seminar here in Denver on Thursday night, some of the financial advisors that did attend the seminars, some of them are giving it up. They just don't think that under President Obama that they have any chance of doing well for their clients, and some of them were even leaving the country. So the situation seems to be extreme. People are very upset about what's happening in the world markets, and again, what we need to do is just be in hard assets. You don't want to trade the very volatile markets, because you're going to end up losing your money. My strongest recommendation before this fiscal cliff thing comes to fruition is to put your money on the sidelines if you're in the stock market, because again, to see the market drop 30-40% and lose your money again just does not make any sense at this point, and you just want to be sitting on the sidelines with your cash. Again, take advantage of the low price of gold and silver, because there's no doubt that inflation is coming, and oil prices along with gold and silver will skyrocket. We also saw a huge move in palladium this week, where palladium prices outpaced most metals. And the fact is that palladium is a market that we recommended many, many years ago when it was at $170, and now the market is trading at $630. So we anticipate the price of palladium will go substantially higher along with gold and silver. But again, Randy, there's confusion in the markets at this point. A lot of people don't know what to do. The best thing to do at this particular point is to remain very conservative. Don't speculate in the markets, and understand that, again, as things sort themselves out, there's very few markets that are going to respond to what's happening, but two of them are the gold and silver markets. There's no doubt in my mind that oil is going to go tremendously higher, and if Iran gets into the mix with Israel and Hamas, which they will, watch for oil prices to skyrocket. Second half of the show, you're going to learn things about diamonds that are going to excite you tremendously, because again, diamonds are in the news almost every single day. So again, Randy, at this particular point, we're extremely excited about what's happening in the marketplace. Again, not happy about what's happening in the world. It's a very frightening time for most people, and again, when wars are breaking out, that is not a good scenario. So again, a lot of the scenarios that we felt were going to happen are now coming to fruition, and again, there is no doubt that the markets are going to respond to it, and probably respond to it before the end of the year.
As I've always said on our show, it's not about optimism or pessimism, it's about realism. And when we had our seminar in Edmonton about a year ago, I said, I believe people can handle the truth. In fact, you should want to hear the truth because that's the only way, in my opinion, you will get through the reality that we are currently in. And it was interesting, last week we had that quote from Jim Rogers, and I'm repeating it again because I think it is so critical. He says, it looks to me like the money printing is going to run amok now, and spending is going to run amok now. This is the important part. He says, I have to invest based on what's happening and not what I would like. Not what I would like, but what is happening. It's not about optimism. It's not about pessimism. It's about realism. You're seeing what's going on around the world. Harold mentioned Israel and Hamas and possibly Iran getting involved. Egypt is starting to dip their toe in the water there as well. It's a very, very dicey time. Some of the top quotes from our newsletter this week, we'll get to them in a second, but please remember, when it comes to investing in gold and silver, platinum and palladium, there's only one company that Harold recommends, that is Worldwide Precious Metals. They were in Calgary during the week, and if they had an opportunity to meet with you, they wanted to pass along a thank you. Thanks, Calgary, for meeting with them. No doubt they'll be in Edmonton, in Toronto, and other areas. We will let you know when they're there. If you would like to speak to them personally and privately about your financial situation, learn about investing in hard assets, gold and silver, that's the company Harold recommends you use. 1-866-623-2002 is their telephone number. The website is wwpmc.com. wwpmc.com, the telephone number 1-866-623-2002. And for those in Calgary that met with them this week, thank you very much. One thing I really believe is going to be huge, and you do not hear about it when they talk about this fiscal cliff, and it sort of drives me crazy, is demographics. And here's a stat from Bloomberg. Each day, some 10,000 of the 78 million Americans born between 1946 and 64, the so-called baby boomers, turn 65. The share of the population in that age group will swell to 18% by 2030 from 13% last year, according to the Pew Research Center in Washington. A lot of the material that we have in our free weekly newsletter, you can get it from Worldwide. Connect with them. They'll be happy to send it out to you free of charge every week via email. Basically, the politicians in the United States, all they're going to do is kick the can down the road because the pain associated with true fixing of the problem, austerity, is just too much for the United States at this point. And Obama talks about a balanced approach. A balanced approach may seem great, but the truth of the matter is they need decisive action now, and it will not come. Daniel Briesman, he's a commodities analyst at Commerce Bank AG in Frankfurt. He said, Obama is a supporter of Bernanke, and his reelection means that the ultra-loose monetary and fiscal policies by the Fed will continue. More and more liquidity will be put into the system, and therefore there will be inflation fears and concerns about currency devaluation. As well, Nigel Farage, he is a member of the European Parliament. He's talking about social unrest. He says, I think the biggest worry is that we get to some kind of total breakdown of confidence in society, of trust in not just the government, but the police force and the army and everything. And he says he genuinely fears that we're going to see a very large-scale confrontation in southern Europe, and with a lot of people getting hurt or killed. That is his biggest fear. Also this week, Mark Faber. A lot of people ask me about Mark Faber's name. People think it's Faber. It's not Faber. It's Mark Faber. That's how he pronounces his name. He was interviewed on CNBC, and he thinks the stock market could really roll over. Here's some of the quotes from that article. In a democracy, they're not going to take the pain. They're going to kick down the problems down the road, and they're going to get bigger and bigger. He also says there will be pain, and it will be substantial pain. The question is, do we take the pain now through austerity or risk a complete collapse of society in 5 to 10 years' time. He also says, I think the whole global financial system will have to be reset. It won't be reset by central bankers, but imploding markets, either the currency markets, debt markets, or stock markets. It will happen one day, and then we'll be lucky to have 50% of the asset values that we have today. As well, billionaire Nathan Kirsch, he's in the food business, real estate business in the United States. He's originally from South Africa. He was quoted this week as saying, I want money. I just don't want the money lying around. We are certain that inflation isn't going away, so smart money is going into hard assets, real assets. And one of the things that caught my attention this week, Harold, is Jim Sinclair, one of the top minds in the gold field, said, gold is going to $3,500. And remember, Jim was the one who predicted that gold would go to $1,650, and he was exactly right. He's calling for $3,500 gold. The U.S. dollar will test 72 sometime in the fall, and he believes that QE to infinity. That is his belief. Harold, we are in a very, very dicey time right now. You see, in Spain, the thing that really hit me this week, and I know we live in Canada and, things are really good here compared to what's happening around the world, but the devastation in some of these countries like Greece and Spain, where you have people committing suicide, when they come to foreclose on your home, now they have stopped those foreclosures. That is the world we are living in, and this is real. You can go look it up on the internet yourself, on Bloomberg or Reuters, any reputable news service. They're reporting on this. This is a time where you have to sit back and take a hard look where you are financially and make sure you are protected, Harold.
Randy, you're 100% right. And again, it's a terrible situation what's going on in Europe, but again, it resulted from, tremendous debt. That's what the sovereign debt situation is. It's the same in the United States. In fact, what's happening in Europe is not all that different that's happening here. And thank God everything is, much, much better in Canada than it is in the States and other parts of the world. So we just have to be very cautious at this point and not let our guard down, because one bad move can cause you to lose most of your net worth. And there's no call for that. We work very hard and we have some success and we put away some money. And the fact is that we're not going to lose it in the paper market. So the best advice I can give at this particular point, until the market has a much clearer direction and a lot of the fear is out of the market, is to get your money out of the paper asset market. Just sit on the sidelines at this point, because again, you remember what happened in 2008, and it was based on Lehman Brothers going out of business, going bankrupt, and unwinding of derivative positions. So there's landmines in the markets right now that we have to be very, very cautious of. You got to watch where you step, because again, between the fiscal cliff and these derivatives, which in my opinion is the most severe situation in the markets at this point. When Lehman went out of business in 2008 and they started unwinding some of these derivative positions, that's what caused the markets to plummet by 50%, one of the reasons, and it also caused other major financial situations to where people started panicking and taking their money out of the bank. A similar situation is going to come as more and more of these derivatives start to come due, and they're financial instruments that most people don't even understand. The problem is it's in the quadrillions. I say quadrillions. It's the biggest market in the world, and it's unregulated. It scares the life out of me. If you're sitting in stocks or paper assets, my suggestion is to get out of those markets at this point and park yourself on the sidelines until the situation straightens itself out, or we find out what's going to happen with this fiscal cliff. If all of a sudden the Democrats and Republicans cannot, not all of a sudden, they've never gotten together on this, but if they don't get together on this fiscal cliff before the end of the year, it could be a disastrous situation, and you just don't want to gamble with it. Just take my advice and sit on the sidelines with your stock positions, because you see what's happening in the markets at this point. The stock market's been down pretty well every single day this week. It's down to 12,500 on the Dow, and the TSX is down to 11,800. We've seen these markets plummet before, and again, we've seen the metals markets respond this way before. Right now, there's confusion in the markets. People cannot understand why the markets aren't doing what they're supposed to be doing. However, Gold is holding support, silver's holding support, and we're going to wake up one day in the very near future and find gold up $100 and silver up $2 or $3 on the day. Make certain that you have physical silver, that you're not in a position where you're in the futures markets and trying to catch short-term moves. You'll miss the entire move in this market. We're going to wake up one day and find gold up $100 and silver up a couple or $3, and it's just going to start the floodgates, and these markets are going to start to run. So again, the scenarios in the world, we're keeping abreast of. The newsletter this week is excellent. It gives you all the information you need to understand what's going on and to make your own financial decisions. But again, if you're a listener to the show for many, many years, you realize that Randy and I bring you the information you need to make an intelligent business decision. What I'm doing at this point here is not speculating in any way. I own physical gold. I own physical silver. A lot of my money is into diamonds, and I have nothing in paper assets at all. Debts are paid down to nothing. And again, I keep some cash on hand. Not that you're making any money on cash, but you need it in order to take advantage of situations in the marketplace. So again, no matter what is happening for people worldwide, a lot of the reasons why people are in trouble right now is because they're taking unnecessary risks in the market out of a situation where they just know what to do and they're panicking. And that's the worst time to make a decision, when you're under pressure and you're just making a rash decision that could either make you money or lose you money. We don't want to make those decisions at this point. We want to be smart about this. The fiscal cliff could be a disaster, and there's no reason to gamble that they're going to actually work out that situation. The problem is they'll kick the can down the road, and this thing could go on for a long, long time. I wouldn't want to be in the markets and risking myself at this particular point. One bad move could put us in a bad position. Gold, silver, diamonds, and oil, that's what's going to make you the money, and it's going to be a tremendous hedge against the heavy inflation that's coming down the road.
Connect with Worldwide Precious Metals. They will educate you. They will earn your business when it comes to investing in gold and silver, platinum, palladium. Start your own investment account today. Precious Metals Investment Account, 1-866-623-2002. Their website is wwpmc.com. You may be sitting back saying, well, I've got time. I don't need to worry. Robert Fitzwilson, this guy has been, you can read in our newsletter, the article that King World News did on him. We have a quick quote from that article. You may sit back and think, I've got time. I don't have to worry. He's saying, rather than trying to guess the answer to as when, investors must take action immediately. For those with wealth to protect, this is no longer an intellectual exercise to guess on outcomes or allocations. This is coming down to an intellectual test, an intelligence test. Survivors will obviously be the ones who take action now and have significant positions in gold and silver. History is clear that such action is the primary way to preserve wealth. Time is very, very short. Do so now. The questions have been answered for anyone willing to look at the reality of the situation. The only uncertainty is when. And this comes back to what I talked about off the top of the show, not about optimism or pessimism. It's about realism. And that's exactly what Robert Fitzwilson is saying. If you really look at the situation, it's a matter of when, not if. And now is the time to take action. Also, we have a great quote from Stephen Lieb. He says, I would also add that this period in front of us is probably going to be the most frightening period of my lifetime. And here's a guy who's been in the investment business, Stephen Lieb, for around 30, 40 years. And I've been around. And I can tell you the way for investors to weather this storm is going to be through the gold and silver space. Michael Pinto said this week, I cannot stress enough that the only thing standing in the way of gold storing is the pretense that the American government cares about fixing our entitlements, deficits, and debt. Once the United States stops pretending it's concerned about the debts and deficits, commodity prices, especially gold and silver, will soar. One of the top stories we have in our newsletter, we have about 2 minutes left here, Harold, is from Jack Barugian. And you've seen him on the Canadian business channel BNN, probably CNBC and Bloomberg as well. He's the CEO of Bull and Bear Partners. He says, looking at gold over the course of the last 4 years, it went up 100% under President Obama. I think that is the canary in the coal mine and more indicative of what we're going to see happen not only in commodities but also in stocks. I think gold could be twice where it is right now. I'm looking at $3,000 to $3,500. So there's that number again. We had that number from Jim Sinclair. He is saying he believes, Jack Barugian, within 3 to 4 years' time, and that he believes that we're going to see quantitative easing, QE to infinity. And that is going to be very, very positive for gold and silver, the commodity complex. And Harold, we have about 30 seconds in this scenario, in our first segment, but we encourage people to hang on because the diamond section, the second half, is going to be very exciting.
You bet, Randy. I'm very excited to present what happened this week. It was an amazing week in diamonds. And again, I think we really summed up in the first half of the show how severe the world situations are at this point.
Once again, as we had that quote, and I think it's so important, Jim Rogers, I have to invest based on what's happening and not what I would like. We may not like what's happening. I understand that. We get that. But we must base our investments on what is happening in front of us. Connect with Worldwide Precious Metals. Learn about investing in gold and silver, platinum, palladium. 1-866-623-2002. Their website is wwpmc.com. Going to come back and talk about diamonds. Harold gave a seminar in Colorado on diamonds, and we had 2 auctions, 2 major announcements to make. We'll come back and talk about that as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial expert, Harold Siegel. We're taping the show on November 16th, 2012. Our time is 9:14 Mountain, 11:14 Eastern. Radio show runs on AM 640 in Toronto. And good luck to the Toronto Argonauts. They play the Montreal Alouettes in the Eastern final. If Toronto wins, they'll be in the Grey Cup in Toronto. Would love to see that happen, the 100th Grey Cup in Toronto. With Toronto in the game, would love to see that happen. Also, the radio show in Calgary, QR77, Calgary playing BC in the West final. So it will either be Calgary or BC playing Toronto or Montreal. We will know later on this weekend. And as well, unfortunately, our Edmonton Eskimos in Edmonton, 6:30 Ched did not make it through, but the Eskimos looking for a new general manager and looking to be better next year. If you ever miss a radio show, don't forget, our shows are archived on Harold's websites, HESradio.com, also rarecoloreddiamonds.com. We have a podcast. That podcast is through iTunes. iTunes is free to put on any device. You can get the show absolutely free of charge. This show is portable, will go anywhere. To connect with Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, 1-866-623-2002. Their website is wwpmc.com. Thanks to everyone that met with them in Calgary during the week. They had a great time visiting with you. Harold's website is rarecoloreddiamonds.com, and he was sharing that information at a top-flight seminar in Colorado last night, Thursday night. rarecoloreddiamonds.com. The featured diamond of the week is a 1.31 carat cushion-cut, fancy, vivid, yellow, internally flawless diamond. And you can see that on the website, rarecoloreddiamonds.com, under Featured Diamond of the Week, and you can see it in our newsletter as well. And Harold, we had 2 events this week happen. We had a world record for a colorless diamond, 76-carat Archduke Joseph diamond, sold for $21.5 million. And we have the auction results for that from Christie's in Geneva. There was also another auction in Geneva the next day from Sotheby's, and a blue diamond sold for a record price of $10.86 million. It was an absolutely stunning week for rare colored diamonds. We have the auction results. You can get them from Harold. He'll be happy to send them to you. But what an exciting week it was for diamonds, Harold.
You better believe it, Randy. Again, I'm so excited about the news that came out, and it was during the seminar. I mean, you couldn't have asked for better timing that these two diamonds sold this week. And we did the seminar in Denver last night. We had a phenomenal crowd. It was a beautiful seminar. The only embarrassing thing was that the live feed did not work, so most people did not get to see it worldwide. However, we promise that we will contact all of our Canadian listeners that did want to sign up for the online seminar, and we will do the seminar for you privately. So expect a call over the next week. There was a lot of people that signed up for the seminar, and again, we will certainly, and it would be our pleasure to enlighten you and do the seminar for you privately. So we will contact you during this week and next week. There was a lot of people that wanted to see the seminar last night, but it was a huge success. Again, with everything happening in the world right now, diamonds are certainly in the forefront. And again, with the volatility in the market, you know, one of the reasons that you want to invest in diamonds is because you don't have that volatility. They don't trade on exchanges. So you don't get the upward and downward movements you get in commodities and stocks because diamonds do not trade on exchanges. We do not trade anything but, or deal in anything but the highest quality of diamonds, the diamonds that have track records that, again, will do best in this type of an economy. Basically, the diamonds that sold this week at auction were just two phenomenal diamonds. Let's just talk about the blue diamond for 1 second, because it was a 10-carat deep blue. Now, the way the GIA grades blue diamonds is that vivid is the highest color grade and the most expensive, and right under that is fancy deep, and then comes fancy intense and fancy blue. In this particular case, what's going to be done with that diamond is going to be recut from a 10-carat down to a 7-carat, because they believe that they're going to be able to turn that diamond into a vivid, which will increase the value of that diamond so substantially, because we know that blue diamonds that are vivid of that quality sell for about $2 million a carat. So, again, what's happening in the diamond market is unprecedented. It's one of the most exciting times to be in that. And, again, you know, what you have to realize is that the two hedges against inflation, the best two hedges are gold and diamonds. Most people didn't know that about the diamond market, but if you go back in history, especially back to the last time we had massive inflation, which was in 79 and 80, gold went to $800, but colored diamonds went up 500% in 2 years. 500%. That means that if you owned a $20,000 yellow flawless diamond, 2 years later, that diamond was worth about $100,000. So what's happening in the diamond market right now is just the most exciting thing, and we're excited because this is a market that we brought to all of our listeners. Nobody ever talked about the rare colored diamond market until 6-7 years ago when we brought it to the forefront. And again, now we're seeing an explosion in prices, and it's our clients that are actually reaping the benefits of this market. The fact is that the diamond market is going to explode. The rare colored diamond market is going to hit levels that nobody ever dreamed of because of a hedge against inflation, and at a time when there's a supply and demand situation. The demand for these diamonds is so high, and the supplies are so very low for high quality, investment quality diamonds that very, very few exist. If you go on our website, Rare Colored Diamonds, and you go onto our legend and look at the different colors of diamonds that we recommend, we do carry all diamonds. We have red diamonds, which are the most expensive and rarest diamonds in the world. With what's happening in the blue diamond market, we have some of the most magnificent blue diamonds that you've ever laid your eyes on. However, those markets have made gigantic moves. They've gone up so substantially that in 2005, you could have bought a vivid blue diamond for about $200,000 a carat, and now they're about $2 million a carat. So the fact is that we're going to experience, and are starting to experience, the same scenario in pink diamonds. As we all know, 95% of the pink diamonds come from one mine, the Argyle mine in Australia. That mine is going to close. You know, last week in the newsletter, Randy found a picture and an article on Argyle pink diamonds, and they showed a champagne flute glass, and it was maybe 3/4 of the way filled up with pink diamonds, and that represented the full year's supply of pink diamonds. That'll put it into the proper perspective as to how small that market is at a time when Argyle pink diamonds are in the news almost every single day. The presentation that we did last night on Argyle's was overwhelming. People could not believe how beautiful these diamonds are. Most people didn't even know in the audience last night about Argyle pinks, and they were thrilled to see the diamonds that we brought to the seminar. And we brought some magnificent diamonds with us, including one of the rarest pink Argyle tender diamonds ever found. We have a princess cut 203 intense pink that would absolutely blow you away. It's set in one of the most beautiful settings, and again, it was the top diamond that came out of the I think it was a 2003 or 2004 Argyle tender, and realizing what happened with the tender this year, it gained such tremendous recognition that there was a video that came out from the BBC because they showed these diamonds for the first time in London during the Diamond Jubilee, and they went crazy for it. You know, the amazing thing about the Argyle pinks is that the mine is starting to come to a close. It'll close within the next 5 years, and the fact is the diamonds are getting smaller and smaller, but the prices are going higher and higher. In 2011, the top diamond that came out of the Argyle tender was a 202 carat round, fancy, vivid, purplish pink I-1 Clarity diamond that sold for over $2 million. This year, the top diamond that came out of the Argyle tender was the Argyle Siren, and it was a 134 radiant cut, fancy, vivid, purplish pink VS2, and that diamond sold for $2 million. So the fact is, a diamond for over 2 carats sold for $2 million in 2011, and now a diamond that was 1.34, substantially smaller, sold for the same price. So these diamonds are getting smaller and smaller, and the prices are going higher and higher. We've invested very, very heavily into Argyle pinks. In fact, if you go on our website, we have the most beautiful Argyle pink diamonds, and these are the type of diamonds that will, number one, offset inflation, and because there's such a huge supply and demand situation, this is a market that we believe in the next 5 to 6 to 7 years that the price of pink diamonds will increase, just like blue diamonds did, 10 times what today's prices are. So again, while they still exist, and while you can still get them at a decent price, we very, very heavily recommend these magnificent Argyle pink diamonds. The other diamonds to own are the yellow flawless diamonds. Now again, we've also invested very heavily in yellow flawlesses because they have a proven track record. These are the magnificent yellow flawless diamonds from South Africa. These are so strong in color on a scale from 1 to 10. These are 9s and 10s. These are the diamonds that you want to own because just on a normal yearly basis, these are the diamonds that go up by 25%. They'll double in price every 4 years. Tell me an investment at this particular point that can double your money in 4 years or give you a 25% return in a year with no risk to it, because these diamonds have never, ever gone down in value. The reason for that is there's so few of them available. And now with diamonds in the news almost every day, these are the type of diamonds that if you want to get involved in the diamond market and you have limited investment capital, these are diamonds that start at about $15,000. But these diamonds, even though in the $15,000 to $20,000 range, they still increase by 25% a year, but they have to be the flawless diamonds, and they have to be the very high quality diamonds. There's some yellow diamonds out there that are very poor quality. They tend to come from India. They're very brittle, and they don't have the sizzle, the fire that the South African and South American yellows have, and those are the diamonds that are on our website. The other diamonds that I want to bring to your attention are not colored diamonds. In fact, they're colorless diamonds. They're the D flawless whites. The reason I'm going to bring these to your attention, just like the Argyle pinks and the yellow flawlesses, these diamonds increase by about 25% a year. However, I know this for a fact because a very close friend of mine has started the only diamond fund ever approved in the world. Many companies have tried to get this off the ground, and it's never worked. This is a brilliant man who's a Swiss banker and lawyer and a good friend of mine now, and he has the only successful fund, and it opened in Europe, and it's actually endorsed and complied by the right authorities within Europe, and it's all based on 1 to 5 carat round, brilliant D flawless diamonds. Now, the fact is that it's a very tiny market. In fact, my cutter cuts 80% of the flawless white diamonds in the world, and he's saying that the fact is that the fund is going to buy almost all of these diamonds. So if you're one of the fortunate few to own a D flawless round diamond, and we do have them on our website, again, it's another diamond that we've invested in very, very heavily, so our clients have the opportunity to invest in these diamonds. Now, our diamonds, in most cases, are the triple X. That doesn't mean that they're what you think it is. It means that they're excellent in every single category. This represents 0.001% of the marketplace. These diamonds can go up 40 to 50% in a year. In fact, in 2008, when the Dow Jones plummeted by 50%, these were the diamonds that increased in price by 50%. So basically, they are uncorrelated to the stock indexes. In fact, when the stock market falls, these diamonds tend to go up even more. So the fact is that if you had $1 million stock portfolio and you had $1 million in these deep flawless white diamonds, if in 2008 the market plummeted by 50%, you lost $500,000 of your $1 million. But if you own the right diamonds, those diamonds went up 50% and you picked up $500,000 on your diamonds. So you ended up washing your losses out by making money on your diamonds on the upside. And this will continue. And the more and more these diamonds are in short supply, which is definitely happening at this point, you're going to find that the prices of these diamonds can double within a year or two. So we recommend 3 diamond classes to you. The yellow flawless diamonds, we believe, will respond to inflation as well as gold will. And again, there's no risk to these diamonds. They go up 25% a year, except in times of extremely high inflation, and then they can go up 400 to 500% over a year or two. And those are the diamonds that, again, are in the $15,000, $20,000, $30,000 range. And the vivid yellow diamonds are going up so substantially that they tend to double now in less than 4 years. And they're very, very difficult to get. So you want to go on our website, rarecoloreddiamonds.com, take a look at the loose diamond section, go to the yellows, and we carry 4 different colors. We carry the fancy light yellows, which are known as canary diamonds. But these diamonds are so strong that they're almost up to the fancy yellow level, and they're just spectacular. We love our yellow flawless diamonds, and so do our clients. So you want to go onto the website and look at those diamonds. And again, you know, in the last 15 years, there has not been a new mine that's opened up that produces any quantity of these diamonds whatsoever. In fact, a lot of the mines are closing because they're just not producing anymore. The other diamonds are obviously the Argyle pinks. When you look at them, they're the most magnificent diamonds that you've ever laid your eyes on. They're going up in price. You know, last year we had Argyle pink diamonds you could get involved in the markets, you know, in the $20,000, $25,000, $30,000 range. Those days are over now. To invest in Argyle pinks, you're looking at $40,000, $50,000, $60,000, and by next year, that's going to be double that again. If you've got money sitting in the stock market and it's not working for you, and you're concerned about the fiscal cliff and the derivatives market and everything that we're talking about, take some of that money out of the risky paper asset market and do yourself a strong favor and start to hedge against inflation and all the horrible things that are about to happen in these marketplaces, because you're going to find that it's the diamond market that could literally make you the money that the paper asset markets are going to take away from you. And then the scenario with these deep flawless whites, it's one of the best situations that I've ever seen. It's a very, very limited market, and the one fund that's ever been approved to sell diamonds as investment is only going to sell these deep flawless, round, brilliant 1 to 5 carat diamonds. I have them. They're of the highest quality, and those are the type of diamonds that, along with the yellow flawlesses and the Argyle pinks, that will get you where you want to go financially and basically hedge you against bad things that are happening in the market. I've never been more excited about the diamond market than I am right now. I'm more proud of my company. Again, it's in the news a lot. We produced a beautiful diamond ring last month for a client of ours, and it got picked up by 387 news agencies around the world. Diamonds are in the news almost every day, but again, we're the company that puts our money where our mouth is. We've invested heavily in these diamonds for ourselves and for our clients, and again, I believe it's the best move that we can make, along with gold and silver, to get through these extremely difficult times.
Great quote in our newsletter, and you can get our newsletter from Harold. Connect with him. All you need to do is go to rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. The quote is from Jeffrey Munn, Managing Director of the London-based jeweler Wardsky. The best diamonds have become extraordinarily valuable. There's a sense at the moment that money is like sand running through fingers, and there's a scramble to buy jewels as a hedge. Get our diamond section of the newsletter from Harold. We have our weekly newsletter. We have a monthly newsletter. Get your name on the list. To give you an example, the diamond auction results from Sotheby's Magnificent Jewel Sale, November 14th, 2012, Geneva, Switzerland. We talked about that magnificent blue diamond. It was supposed to go, the estimate on it was $3.2 to $4.2 million. It went for $10.2 million. You heard right as well. That was lot 555. Lot 512, and this was another amazing result, a fancy yellow diamond ring. The estimate on it was $123,000 to $170,000. It went for $314,000. You can go through all the auction results and speak with Harold about the featured diamond as well. It's a 1.31 carat cushion cut, fancy, vivid, yellow, internally flawless diamond, a must-have diamond for your collection and your portfolio. Harold, we have about 5 minutes left in our show here in our segment, and the news coming out this week, you giving the seminar in Colorado. Obviously, we're disappointed with the streaming, but we're going to get that fixed. And one thing we have learned, and when it is fixed, you will be able to connect with people all around the world giving seminars on rare colored diamonds, and that is a very exciting prospect.
You bet it is. And again, we used a company here in the States when I've always worked with my good friends at Relentless in Canada up in Vancouver. They've always done a phenomenal job. They're experts at the live streaming. And again, the next time we do this, believe me, there will be no embarrassment over it. And again, everybody will get to see it. We had over 4,000 people worldwide that wanted to see the seminar. So again, that gives you an indication as to how popular this market is now becoming. One thing that I want to leave you with is that how much guts does it take to buy a blue diamond for $10 million, knowing that you're going to recut it into a 7-carat vivid diamond? Again, that just shows the confidence of the cutter and the owner, who happens to be Lawrence Graff, in my opinion, the king of diamonds, and he's taking a $10 million diamond, cutting it down by 3 carats to make something even more valuable. I think that's just an unbelievable thing. Again, I've never been more excited about the diamond market than I am right now, and I feel the same way about gold and silver. I know the markets have not performed the way that we anticipated they would this year. However, I'm very bullish on gold and silver, and again, between gold, silver, diamonds, and oil, we're going to get through these difficult times, and we're going to be able to make the money in the markets to take advantage of the markets that need to be taken advantage of down the road. So again, let's just keep our heads above us. Let's do the right thing. Let's not speculate. Put some of your money in hard assets, and I'm sure we're going to do extremely well over the next 4 to 5 years.
Let's take a look at a few more auction results. Christie's Geneva Magnificent Jewel Sale, November 13th. They had the Archduke Joseph diamond selling for $21.5 million. There was also lot 233, a colored diamond and diamond brooch by Wartsky. And it had a fancy, intense blue diamond center. And that weighed 3.3. It was flanked by other diamonds as well. The estimate on it was $1 million. It went for $2.4 million. In fact, there's a few others. Lot 177, a colored diamond ring, fancy light gray, marquee-shaped diamond. The estimate on it, $50,000 to $73,000. It went for close to $400,000. Get the diamond results from Harold, the 2 auctions in Geneva from Sotheby's and Christie's. Read that story over on the 76-carat Archduke Joseph diamond selling for $21.5 million, and that blue diamond selling for over $10 million, a record. Both are records. Get that information from Harold. RareColoredDiamonds.com is his website. RareColoredDiamonds.com. The telephone number 1-800-432-1022. And Harold, we have about 1 minute left, and yes, it is a very frustrating time on one level, but if you are in the right markets, as we believe we are, we will prosper. We just need to be patient, and being patient is never easy at times.
No, it isn't. But then again, 90% of the money is made by 10% of the people, and it takes guts to do what we do. I want to take my hat off to our listeners, to our radio shows and clients that have done the right thing. Over time, their financial advisors may have said gold is not a good investment. It's gone from $250 to $1,900. Silver was not a good investment. Went from $3.80 up to $50, and oil went from $19 up to $170, and is trading right now still at 5 times where it was when when we started the show. So again, between what's happening in the rare color diamond market for our clients and what's happening in the gold and silver markets, I couldn't be more secure in our recommendations, and I feel very strongly that the next 4 to 5 years, it's the listeners to our radio show that will do the best.
Thank you very much, Harold Siegel.
I had a great time. Thank you very much, Randy. You did a fabulous job today. The newsletter is outstanding. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold, rarecolorediamonds.com, 1-800-432-1022. Speak with Worldwide Precious Metals, wwpmc.com. Their telephone number, 1-866-623-2002. Get our newsletter from Harold or Worldwide. Next week in Edmonton, we just found this out. Next week in Edmonton, we're on from 1 until 2 o'clock because of the Grey Cup. I would imagine that will be the case in Calgary as well. Our time will move. In Toronto, we're on at the same time, but in Edmonton, 1 to 2 o'clock. Keep that in mind. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.